Hi, friends. I hope you all are doing very well in your respective lives. Today, I, Kunal Nagpal, would like to welcome you back to this great academic forum, Nagpal Ecnotech Academia, wherein today we are actually going to focus our discussion on discussing the recent developments in the core economic parameter of our country, that is the current account deficit. My dear friends, the CAD, that is the current account deficit, is actually going to see a very favorable change in the near future. So this is really a great news. However, it's quite unlikely that this particular parameter is going to go below 2% of the GDP. So I would also like to point that the services sector of our country is actually performing very well, helping immensely to actually help the current account deficit to move in this particular trend. So my dear friends, the current account deficit has seen the narrowing in 2024 financial year, but unlikely to dip below 2% of the gross domestic product. India's current account deficit is actually expected to improve in the financial year 2024, but may not slip below 2% of the country's gross domestic product. An ED poll showed. The median forecast of 14 economists pegged the current account deficit at 2% of the GDP in the financial year 2024, helped by softening the global commodity prices and strengthening of the services exports. So that is, the two core reasons are the softening of the global commodity prices and strengthening of the services exports, which are helping the CAD to get narrower and narrower. The CAD for the financial year 2023 is expected at 2.5% of the GDP, over double the 1.2% of the GDP in the preceding year. We see the current account deficit easing from here on, led by incrementally improving the trade deficit amid receding commodity prices, especially for oil, said Madhavi Arora, lead economist, MK Global. The solid services trade surplus will actually continue to strongly offset the current account deficit, which will now likely amount to $85 billion in 2023-24. So the forecasts in the poll ranged from 1.6% to 2.9% for the financial year 2024 and 2.1% to 3.3% for the current fiscal, that is for the ongoing fiscal. In 2023-24, while the exports are likely to falter, the imports will also weaken, and that will actually help narrow the trade deficit. The strong momentum in the services sector export and remittances is likely to continue the next fiscal year as well, said Ms. Rajani Sinha, chief economist at CareEdge. So my dear friends, the merchandise trade deficit eased in the past couple of months due to the falling commodity prices after remaining elevated for the most of the year 2023. Mr. Rahul Bajoria, Managing Director and Head of EM Asia ex-China Economics Barclays, said the current account deficit might narrow further if oil prices remain at the current levels. We see the risks tilted towards a smaller current account deficit in the financial year 2023-24, as our baseline oil assumption is at $85 per barrel, he said. So there is actually the services boost which we are noticing in our economy. So my dear friends, the services have provided a cushion to the trade balance in the last year. The $132.94 billion services trade surplus for April to February financial year 2023 had helped keep the overall trade deficit contained despite a 43% jump in the merchandise trade deficit to $247.5 billion during April to February financial year 2023 from $172.5 billion in the previous year. The narrowing of the current account may not matter in immediate term. That's what I quoted in the beginning of the discussion. So especially with so much global financial market uncertainty. This is the reason because of which the narrowing of the CAD is not going to impact in the short term or the immediate term. But over the medium term, it does bode well, said Mr. Dheeraj Nim, FX strategist and economist, ANZ. So, my dear friends, it's really great to go through this in-depth analysis wherein we have actually studied the recent development which we are going to see in terms of the narrowing of the current account deficit for the Indian economy. So this is really great. And this particular analysis has been presented by the 14 prominent economists of our country. So, I believe that you must have found this session really impactful, helping you to broaden your overall mindset, helping you to actually realize the core strengths of the Indian economy, as I have been highlighting in my previous sessions as well, that are well laid out strategies, well planned and laid out strategies are really forming the backbone of the Indian economy, helping it to actually rise and shine with flying colors. And as seen in today's aspect, the narrowing of the current account deficit, especially in today's times of increasing global financial market uncertainty, it's actually worth an applause that Indian economy is faring so well. So that's all for today, my dear friends. I hope you all take excellent care of yourselves until we meet next. Thank you so much. Namaskar. Jai Hind.